is Cecil B. Moneygetter, host of Money Talks, a new financial news upload that is laser focused on digital finance, cryptocurrencies, robotics, electric vehicles, stocks, the cannabis industry, and much, much more. Tune in and join us every Monday, Wednesday, and Friday at 7 p.m. Eastern on our Information Meets Execution YouTube channel as we bring you financial news uploads, one trending topic at a time. And don't forget to stay listening, because money talks.
Good evening. Today is Wednesday, September 25th. You're watching Money Talks, and I'm your host, Cecil B. Moneygetter. First up, in real estate news, TikToker pays zero mortgage on $1 million home, and here's how. If you live in a city like New York or San Francisco, you might compare the odds of home ownership with something like seeing a total solar eclipse, being struck by lightning, or winning the lottery. But one black millennial is out here to let you know that owning a home might be easier than you think. Shayla Mulzac is a Brooklyn-based influencer who uses social media to promote black home ownership as a source of equity and generational wealth. Her TikTok videos break down the basics in a way that even the most financially illiterate can understand. And after checking out a few of her posts for myself, I can honestly tell you that I'm holding on to hope that I may be able to purchase a home in New York City in this lifetime. But she doesn't mince words. Mulzac admits that while owning a home is not beyond the realm of possibility, it's not for the lazy. There's maintenance involved, right? Things may need to be fixed or upgraded over time. But Mulzac argues that the energy that comes with owning a home is no different than what is required to take care of your hair or raise a child. And once you get the hang of it, she promises that your home will be a great source of passive income and one big ticket purchase you'll be glad you made. My favorite video is a February 11th explainer breaking down the steps Mulzac took to purchase her first home in Brooklyn in 2021, which received over 33,000 views on TikTok. There, Mulzac explains the numbers behind the purchase of her two-family, four-bedroom, 2.5-bath home in Bedford-Stuyvesant in the simplest of terms. In the video, Mulzac explains that she took out a $930,000 loan for the 17,000 square foot two-family property, but her $3,200 mortgage is covered by her roommate and a tenant who lives in a separate unit in the building. She also shared that by coming to the closing table with $47,000, she was able to buy down her interest rate from nearly 4% to 1%, and her information is getting lots of love. As a matter of fact, I don't think I could have said it better myself. Get in the comments and let me know what you think and how you feel. And in fintech news, PNC partners with Plaid to boost customer data protection. The PNC Financial Services Group, Inc. and Plaid, a fintech company specializing in data transfer networks, have entered into a bilateral data access agreement. This agreement intends to help PNC customers across the United States to securely and efficiently share their financial data with their preferred financial applications through Plaid. PNC is utilizing Akoya as its application programming interface service provider to facilitate the secure transfer of customer financial information to authorized data recipients. It is to be noted that the integration of Akoya Data Access Network into PNC Financial subsidiary, PNC Bank, was announced in 2021. PNC Financial and Plaid are pleased to work together to help PNC clients maintain greater control over the tools they utilize to live a stable financial life. PNC's agreement with Plaid to enhance customer data security and efficiency comes at a time when other major banks like Wells Fargo and Company and U.S. Bancorp are also enhancing their API technologies. Last week, WFC expanded its APIs portfolio with the launch of specialized APIs for its commercial banking clients. This automated setup permits effortless data transfer among trading partners, reducing delays in sending and receiving information. In June, USB's wholly owned subsidiary, Elavon, launched the Elavon Cloud Payments Interface. This advanced API is intended to simplify managing digital and in-person payment experiences for hotels and other entities related to hospitality. Natalie Telepass, Executive Vice President of Digital and Payments at PNC, said PNC's use of its Akoya-provided API allows for all data recipients, including Plaid, to get connected fast while also enabling customers to reliably control what financial data they permissions without having to share their login credentials with third parties. Through this new partnership with Plaid, PNC customers will be able to achieve greater data security, privacy, and control while using the third-party financial apps and services they enjoy, stated Telepass. PNC's data access agreement with Plaid highlights the bank's commitment to enhance its digital banking while empowering customers with greater security and control over their financial data. Such a strategic move to enhance customer data security will further solidify PNC's customer loyalty and attract new clients seeking advanced, secured digital solutions. This could lead to increased transaction volumes and higher revenue streams. Over the past month, shares of PNC have gained 20.2% compared with the industry growth of 8.7%. Get in the comments and let me know what you think and how you feel. Up next, in trending news, interest rate cut fuels housing market rebound. American homeowners and prospective buyers have been biding their time, waiting for a decisive move from the Federal Reserve to reignite the mortgage market. That moment came on September 18th when the Fed's large and unexpected 50 basis point rate cut, bringing the target range to 4.75 to 5%, opened the floodgates for mortgage refinancing and home purchases. According to the Mortgage Bankers Association, applications jumped 11% in the week ending September 20th. By building on the previous week's 14.2% surge and pushing activity to its highest level since June of 2022. The spike in demand has closely followed the broader trend in benchmark mortgage rates. The average rate on a 30-year fixed, often the go-to option for American homebuyers, fell to a 2-year low of 6.13%. The surge of activity has particularly elevated refinancing, which had been dormant amid years of high borrowing costs. Refinancing applications soared by 20% last week as homeowners moved quickly to lock in lower rates and cut their monthly mortgage payments. The refinance application index has rallied to levels last seen in late March of 2022. Lower mortgage rates can directly translate into lower monthly payments for millions of Americans, making refinancing an appealing option. For example, a homeowner with a $300,000 loan at 7% rate could save around $300 per month if they refinance into a 6% loan. Historically, periods of falling interest rates have coincided with stronger home buying activity, and this time appears to be no different. Mortgage rates likely had this cut, and this expected rate path priced in at lower mortgage rates, now close to 6%, have resulted in much more refinance and some additional purchase activity in recent weeks, said Mike Frattoni, MBA's Senior Vice President and Chief Economist. If mortgage rates remain near these levels, it would support a stronger than typical falling housing market, and next spring could see a real rebound in activity. The Vanguard Real Estate ETF, which tracks the broader real estate sector, was flat in pre-market trading following the news. Similarly, the iShares Residential and Multi-Sector Real Estate ETF, which has more direct exposure to the housing market, held steady. Meanwhile, the Van Eck Mortgage REIT Income ETF saw a slight uptick of 0.5%. like in the comments and let me know what you think and how you feel.
Talks on our Information Meets Execution YouTube channel. You can also check out the 734 Listening Library YouTube channel for self-help shorts and audiobooks. Follow us on Instagram at 734 Miscellaneous LLC to continue our journey of growth and success together. I'll see you at the top. Holla.